If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description. Matthew, welcome to Real Vision.
Thanks, Ash. Thanks for having me.
I've really been looking forward to this interview for some time now. You have a really interesting background. You were an early investor in Bitcoin, Ethereum, Bloq One, in Coinbase. You've been to the space for a very long time. You began connecting people starting back in 2013, and you've had an interesting career as a venture capitalist as well. We're going to talk more about some of the things that you're doing at Bloq in a moment. But first, tell us a little bit about your journey, your early days as an investor.
Well, I guess I'll start by, I'm a first generation Polish American. So my parents immigrated from Poland, and I actually learned Polish before I learned English. So Chicago's this classic immigrant town for Poles, where it's the largest populated city outside of Warsaw for Polish folks. That's why there was this big migration here, and there were families and infrastructure, et cetera. I started out growing up in Chicago, and then I worked for a private equity firm and ultimately wound up at Advent International in London. And it was a lucky break because we're working on a deal together with Advent, and they kind of noticed me and then started recruiting me. And I didn't have an MBA. I was the youngest principal they ever hired. So it was like all this kind of exciting new, this ability to break through this private equity bubble was pretty cool. But the entire time I was there, I was looking out the window, and the early internet was starting. Like you could see like this, the .com, the early internet, all these new companies were forming, market was going crazy. And at Advent, it was, a very conservative white shoe private equity firm that stuck to their knitting. So they really missed the early internet because of their discipline. But during those early days, I left and started an internet fund, raised $250 million from Microsoft, HP, and Dell, and was chasing opportunities in the early internet, which was a pretty wild time. People would be coming in with utensils.com, and people would get funded with the most obscure things. There's some interesting analogs to certain tokenized projects today. But with all that, I went from this private equity kind of diligence, rigor-minded kind of discipline to the fast-paced kind of moments of the early internet. And that was a really interesting transition for me. And then the market fell, out the other end of that after, 2000, kind of spring of 2000. And then I went from investing.
I remember those days well. I was at Credit Suisse, and they were. I mean, we were both sort of the young kids back in those days, and they were heady times. I mean, it was just surreal. And I remember, and I guess it was April of 2000 when the bottom fell out of that market. 20-something-year-old me was like, wait, so it doesn't just go up forever. It's not just this incredible curve ever upward. And it was a shocking time, but a fascinating juxtaposition to hear you talk about the world of private equity. And, going back to the late 90s, early 2000s, private equity was a very sort of formal. But
Hi, I'm Raoul Powell. Sorry to interrupt your video. I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Time, but a fascinating juxtaposition to hear you talk about the world of private equity. And going back to the late 90s, early 2000s, private equity was a very sort of formal button-down space, and then the new world being born in the Valley and in technology. What an incredible experience to have at that age.
Yeah, I mean, it was, and Credit Suisse was our banker as well. So fond memories with all those folks. But it was, yeah, it was a crazy time because, you know, private equity discipline, you would do diligence, you kind of go through this whole process. And in the venture space, it was a lot more instinctual, a lot more founder-led. You didn't have cash flows, didn't have a brand, didn't have all those things that you look for. And so then you have to look at the technology and then look at the team that's going to develop this. And so it was pretty cool on the ascent, but on the back end of that, I had to learn how to operate businesses. I had to think about how to find a compass, and the market already collapsed. And so you know, if you had cash, if you had a business model, if you had a team, you would be able to withstand that. And if you didn't, and you were short on cash, or your business model needs to evolve, or your team was, you know, 50%, then those companies would kind of disappear. And so I had to figure out which end was up in the portfolio. We had like 25 businesses, and had to find the compass of what worked, what didn't work, you know, shutting companies down, firing people. It was kind of a bloodbath out the other end of that, but it really, from an operating standpoint, it taught me how to find the center of a business, and then really kind of focus your time and energy on like the winners, if you will, or where there's substance. And so that was really hard to kind of go through, you know, all these businesses and try and collate that into a kind of a priority set, or some kind of you know, way in which you would apply, you know, your energy. And so that was, you know, gave me all these kind of the scar tissue on my arms in terms of trying to figure that out. But that was helpful. And, you know, post that chapter, I wound up starting my own venture firm, and built 4 enterprise software companies along the way in HR, video surveillance, emergency notification, managed services. And so partnered and co-founded a lot of businesses, and kind of went from, you know, investor to operator to investor operator in a lot of different spaces, primarily in the cloud space, you know, software as a service, and, you know, building really practical, useful technologies. I was always enamored by those entrepreneurs that would come in and say, oh, you know, we're going to change the world with, you know, this dating app, or this, you know, whatever. And you're kind of like, you know, it's not really going to change the world. Or sometimes you saw things that were like, wow, that's going to change the world. And I never really had that until I came across crypto and Bitcoin. That was the moment where I was like, there is something at that intersection of change the world, economic freedom, you know, all these kind of the decentralized nature of it, and the early kind of, you know, trying to fit that into a model was really tough, but it had all the aspects of the things I was in a weird way looking for, of like the change the world, intersection of tech and finance. And it was just kind of like too interesting to pass up.
Yeah. So what was your first experience? What was your first exposure? I know you were very early, but how did you become aware of it at first? What were your initial thoughts? And then how did you kind of scale into it?
It was fortunate. Bought a company in Singapore in 2005, and it became a social gaming platform in Southeast Asia. And so I was chairman of this company. And when you're in social gaming, you know, think about like, you know, Zynga back in the day, but in Southeast Asia, that was the business model. But the dynamics of running a social gaming platform, payment processing became a really sticky, tough, cumbersome, full of friction dynamic. And payment processing became a core competency to get credit cards, ACH, you know, wires to 9 different countries, and trying to figure out how to make heads or tails of that. And that kind of led the thinking to, oh, let's build an exchange for gaming credits. So if Ash, on your platform, you would have Ash credits and I would have Mac credits, then we would go in this exchange, and you would exchange that for mine, and then I could play into your gaming system. And it was this interesting exchange for gaming credits. And then this is now 2011. Somebody said, you know, there's this thing called Bitcoin that's starting to become a thing. And a lot of gamers were early into Bitcoin. And so it was like a big theme in the early days. And so I read it. I remember looking at the Wikipedia link for Bitcoin, and I was like, wow, you could mine this thing. It's like a golden goose. You could create your own Bitcoins out of this. And I was kind of like crazy impressed and then dismissive, like most people are, still to this day, about the technology and who's behind it and who's Satoshi and all the kind of instinctual things a person on the street would say. So I was super intrigued but dismissive, and it took me about a year of trying to figure it out. And that happened because I was traveling back to Chicago, talking to people. I went to San Francisco and up and down Sand Hill Road. And I'm like, this is really interesting. What do you guys think? And the interesting part about early days of Bitcoin is nobody really wanted to think about it, touch it, because the narrative was encased in like malicious activity, the Silk Road, buying drugs, and that narrative on some people's psyche still holds true today. And so going up and down Sand Hill Road to talk to people about this, because you want to compare notes or what have you, it was a flat line. Nobody really was engaged. And then, in later years, not only were they still disengaged, but their LP documents, and the way in which they invest capital, they were precluded from investing in, the typical document can invest in real estate or oil and gas or currencies, or, there's these prohibited, investments as a venture firm. And so they kind of looked at, well, if it's like a currency, we can't invest in it anyway. So they found every excuse in the world to avoid getting into Bitcoin in the early days. And I kind of, I don't know if it's something I learned, but maybe intuition was like, when everybody doesn't like something, it's like you could be a leader in it if you go early and deep. And so it was just by fortune that I just, locked myself in a room and I just studied Bitcoin for like a week, and came out of it saying like, this is something definitely special, interesting, and unique. And then at the other end of it, I was like, okay, who else is doing this? And I started looking at conferences and people and trying to kind of network and connect with what was happening at the time.
Yeah. And you were famous for the dinners that you gave all over the country, networking and talking with people. Tell us a little bit about that, why you did it and what you learned in the process.
I mean, it was a way for me to learn. It was a hack I used so I could learn about the tech, learn about the kind of gravitational pulls, the people involved, and so would go to conferences. And if you ever go to a conference in the early days of an industry, they're not really exciting. There's like in many of these conferences, the people that spoke on stage would get off stage and then go into the audience. And some of the conferences in the early days of Bitcoin, it was almost a 1-to-1 ratio. The speakers were the audience, and which was kind of fascinating because you'd speak, you'd get off stage, and you look to your left and right, and it's like, these are the next speakers, and there's like nobody else there. So it was a pretty small group of folks in the early days. And when you go to conferences, there's either, nobody organizes a dinner, or if there's a conference dinner, it's usually some weird, rubber chicken dinner in some hotel ballroom that nobody wants to go at. So I was kind of an organizer. I was kind of a foodie, and I wanted to get together. And it was easier to invite 10 or 15 or 20 people, and then be able to kind of hit multiple birds with a particular stone. So for me, it was like super informative. I got to understand who some of the best developers were. Early days was like, Vitalik and CZ from Binance, and Charlie Lee, Bobby Lee, Brock Pierce, just an incredible set of entrepreneurs in the earliest days of crypto. And at these dinners, and I would see deals getting made. I would see people getting hired. I would see people describing their businesses, because back then, pitch decks were not properly put together. People were running out of money, and trying to bootstrap their businesses. So it was very raw and amazing at the same time. And so that led to other people saying, hey, I find value in these dinners. And so wound up doing these dinners at every crypto conference that was happening at the time, which there were, it went from, onesie twosies to almost one every month, every other month. Now there's, I guess before the pandemic, there's probably a crypto conference every week to a certain point. But people found value in doing that, much like I did, where they were connecting, investing, building relationships. And it helped me from a kind of hacking into the industry back in 2013 to just understand what's what and who's who. And from that, just built a tremendous network of friends and partners. And as soon as the pandemic is up, we'll probably do not as many, but trying to get a supper club, a Bitcoin supper club organized here sometime soon, because I really enjoy them.
Yeah. And it's fascinating, of course, because you have the exact right set of skills, the exact right moment. You have a background as an investor in tech companies and a background as an operator, and you have a bunch of folks who have these amazing ideas in this incredibly explosive new space, but who probably don't have that skill set, have probably never thought in the formal terms that a VC, for example, would think about funding opportunities, understanding a space, looking at the total addressable market, and all of the things that are kind of taken for granted on Sand Hill Road.
Yeah, I mean, none of the deals, I was going to say some, but none of the deals actually fit any traditional model, because some of them didn't even have pitch decks. The ones that had pitch decks weren't really thoughtfully put together. But it was super raw, super early. And then, at the time, anybody that was looking to raise capital, I would invest. Because it was a learning curve for me. If you invested, I would pay attention. I would have metrics. I would see growth. I would see, different dynamics on how this industry is growing or not growing, or quite frankly, the investments that I've made kind of created this heat map that helped me understand where the white spaces were forming, who the right entrepreneurs were, and that was very informative to me. And it was like. Not that I was trying to buy an education by investing, but I got an education by investing, and not, there was a voice in the back of my head to say like, oh, you got to go through this diligence, figure out the addressable market, et cetera. This was a lot more raw. And I felt like, by the time you did that analysis, the deal or the opportunity would have been gone. Yeah. So it's been a pretty steep kind of ascent from the early days, and to this day, it's like it's steeper than it's ever been in terms of learning curve, deal flow, and kind of the network, and how to keep in touch with friends and partners. It's just it's pretty crazy these days.
Yeah. And what did that early heat map look like that led you to connect with Vitalik, invest in Ethereum, Bloq One, obviously Bitcoin, to get involved with what was happening at Coinbase? What were some of the key insights that you had?
It was like all networking. It's all people driven. And so connecting with the people that were investing and building at the time, it was pretty obvious where to spend time and energy. I remember when Vitalik launched the Ethereum white paper in Miami of 2014 in January. I remember they all had these Ethereum t-shirts on. They were passing out the white paper, and it was just an interesting, it was probably one of the better marketed or kind of community driven approaches in crypto. There was a lot of different crypto projects at the time, like MadeSafe, and like Factom was developing. There were color coins and all these other primitives. But Ethereum was like the first, and it wasn't well organized, but it was well organized in crypto at the time. And then spending time with Vitalik he vibrates at a completely different level. And his origin story in terms of him originally wanting to build a scripting language on Bitcoin, and the Bitcoin communities, certainly has its priority set and stack. identified really kind of pushed him into building his own project, which was fascinating to watch, and have a front row seat to that.
Yeah, it's pretty extraordinary to have been present at the creation and to have seen some of these basic primitives that are going to be the building blocks of the future get created.
Yeah. I mean, and it's we're still. I know we're let's just say a decade into this crypto journey. We're still super early. If you think about even the people in your personal network who has or doesn't have crypto, what their comprehension is of it, and I think it's got a long way to go in terms of there's a financial component to it, obviously. There's a new web component in terms of Web3, and there's a huge undertaking ahead of us to do that. And so if you think about all this stuff being exercised in the right way in terms of what's going to happen in DeFi and Web3, we're maybe in the second inning.
Yeah. And that brings us quite elegantly to Bloq and the infrastructure projects that you guys are working on. Tell us a little bit about the origin story of Bloq, what problem you were trying to solve, what opportunity you saw, and what were the fundamental drivers of you spinning it up?
So during one of my dinners, I remember meeting Jeff Garzik, and that was somebody I've been wanting to meet for, I think, probably a year. Because I heard of him, he was a Bitcoin core developer, and I really wanted to just kind of see how he thinks and what he's doing, what he's up to, et cetera. And Jeff's background is pretty amazing. He spent a decade at Red Hat working on as a Linux kernel developer with Linus Torvalds. So he was kind of in the inner sanctum there for Linux, and then. And
by the way, for our viewers who are coming to us from the financial side, being a core developer with Linus in the Linux space is about as serious as it gets from the technology side.
Yeah, and Jeff likes to say, if you're running a server or an Android phone, you're running parts of his code. But it was a decade long, and he was an open source junkie. He always thought about, open source being key, access, extensibility, ability to build on top of stuff. And then when I met Jeff, he was working on of course, an open source CubeSat. So a satellite that was very small, cost effective, but unlike a lot of other satellite manufacturers, it was all closed source. Nobody would know how to build it, what's inside, et cetera. It was like either a government, NASA, or Lockheed, and that was all top secret. Here, he's like, I'm going to build one that's open source. And so I was like, this is really interesting, the way he thinks. And again, he was post Red Hat, he was early into the Bitcoin project at the time. And so it was literally Satoshi, Gavin Andreessen, who's on our board, and then went to Jeff. And so he was very early in contributing to and interacting with Satoshi. And so when you look at, Linux and Bitcoin, two of arguably the most important open source software projects in recent history, he was a part of both. And so that pedigree and that thinking, I was like, is super interesting, visionary, thoughtful developer. And so we got together, and he was looking for his next chapter. And I was like, I've invested in like a lot of different companies in the space, and we saw this as an opportunity to collaborate, partner, and build something meaningful in this space. And so the heritage was obviously infrastructure software. And the early days, we were working with the crypto 50 companies, so Circle, Bitmain, et cetera, and Fortune 50 companies, so Citi, Fidelity, et cetera. And we were building infrastructure, but the caveat was it's got to be infrastructure for public networks, such that if you wanted to track and trace a head of cabbage on a blockchain, go talk to Accenture or Deloitte. They'll do a beautiful job of doing a private blockchain exercise for you. So we always, from day zero, wanted to build and extensify public blockchain networks, and it has to have a token on it. So that's the other dynamic that is super integral and important to how we think about these networks, these railroads that are being built, the incentives and the rest of it. And so we built Fidelity's first Bitcoin wallet. We did a lot of interesting things back in the day. But that kind of was exercise and preparing us for what we are now, which is we're exclusively focused on DeFi and DeFi infrastructure. And we launched a project earlier this year called Vesper, which is a platform for DeFi, which we're super excited and proud of. And so that kind of early days morphed into, the crypto space, the blockchain space was going in a lot of different directions, whether it was like Web3 or DeFi or NFTs. And you had to pick a particular lane to really get a bite of one of these opportunities. And so we spent a lot of time building, iterating, and investing in the DeFi space.
Yeah. So why DeFi? What was it that you identified there as being a unique opportunity that seemed worthy of concentrating on versus all of the other opportunities you saw in the space?
I think the market opportunity was gargantuan. You know, the software is eating the world by Mark Andreessen. DeFi is going to eat banks. Every layer of banking, lending, borrowing, every single primitive that a bank does is transformed into software now. And not only that, but it's also accessible. So big institutions could plug in, and then a taxi driver in Indonesia could plug in, and those systems are very powerful. And we wanted to build towards that. And so we originally built a project called Metronome, which was DeFi before DeFi. And we launched that in June of 2018, which was, from a market timing standpoint, was not ideal. But we built some early primitives, like all the proceeds that went from that token sale went into a smart contract. Didn't go to some foundation, didn't go into our pockets, but it went into code. And then that initial tranche of the token sale was used as liquidity in a market maker for Metronome to Ethereum and back. And so building that system, and we built it as an autonomous system. So it was, once you build it, you can't really change it. And that was, autonomous systems will be the most valuable and the most powerful in all of blockchain and crypto, meaning once they're built, you can't really shut them down or change them. Can't really innovate sometimes on top of it. You'd have to do it, layered on top. But once the rules are set, people and ultimately machines will really plug in and scale these things. And so that chapter was really informative to us. And then about a year ago, we were seeing the DeFi space continue to march forward, and that's when we started building Vesper. And then if you look at what happened last summer.
For people who don't know.
So Vesper is a DeFi platform to make participating in DeFi much easier. So while there are all these primitives to lend and borrow and all these things, there's a lot of complexity there. And there's a lot of complexity to generate a yield strategy. So if you want to, if you have Ethereum and you want to compound your Ethereum, you would have to go from Ethereum into Maker, create some DAI, put DAI into Aave, create a yield, and then go through Uniswap to go back to the front and give you more Ethereum. And so all the complexity there is mind-numbing for the average user, and it's just off-putting, quite frankly. And so we needed to create products that put all that and simplify that, put all that together. And so our smart contract does literally what I just described in terms of depositing ETH and earning ETH. And so that's simplifying that, all the transaction fees involved, et cetera, having a better UI, UX, a better experience and more intuitive experience was important. And then a lot of these projects that went out last summer and fall were anonymous. They weren't audited. And so we're a known team. We audit everything twice, full documentation. And so we took some of the opportunities in DeFi to try and bring that a little closer, and some comfort levels for market participants to engage in. We tried to kind of bring it all together in a more palatable way, because most, if not all this stuff, comes through MetaMask, and that experience to put any significant capital into a web browser extension and into any of these projects and pools for the average user is literally impossible. So we're continuously working to make that easier.
Yeah, I was going to say, talking of which, Matthew, explain a little bit about what that challenge is for people who may be interested in this space, but who haven't yet participated, understanding the way that MetaMask works, wallets work, the way that the plugins have to function. It's a little bit complicated, I think, precisely to your point. For people who don't already know about it, explain a little bit more in detail about what those challenges were and why you thought it was so important to solve them.
Yeah, I mean, it kind of reminds me of the early days of Bitcoin, of like, how do I buy Bitcoin? How do I get Ethereum? And some of those were on obscure exchanges, whether it's Mt. Gox or Cryptsy or some of these other ones that really didn't know what you're engaging with. And so it was really hard to, from a risk standpoint, know what was happening. And so fast forward to DeFi today, most projects interact with like a MetaMask wallet. And that's what most people on the planet do not have. It's very crypto native. It's very crypto savvy to engage in these systems with a MetaMask wallet or a Ledger or any of these other wallets that you connect to in order to participate in these systems. And so the vast majority of the assets that are in Vesper come through MetaMask. And to me, I view that as an opportunity to kind of extend other spokes off the wheel on how people engage in DeFi and engage in Vesper. I think there's other avenues and paths and access points that are going to continue to make it easier for folks to engage, because in a minute I described to somebody, you have to be on MetaMask and then deposit into this wallet and then into this particular platform. That zeroes out a lot of people. And so, right. So the bridge work between whether it's institutions or individuals, we've got a long way to go. I think some exchanges are now being very thoughtful in how they interact and doing that. And there's a big reason for it, because there's two big themes there. There's one is people want to engage in DeFi. It's growing very fast and they want exposure there. And then two, hodlers see this as an opportunity to compound their holdings. So if you're holding ETH, you could put it into a DeFi platform to continuously generate more ETH. And so I think from a hodler standpoint, the product market fit is there. And then from just the transformative nature of DeFi and being able to participate in that, there's an incredible amount of demand for that.
Yeah. And obviously, even people who are watching the space just casually know that DeFi is red hot at the moment. I'm curious, I generally tend to hear one of three different critiques of DeFi. You've already mentioned one, which is it's just too complicated, right? I don't know what a MetaMask wallet is. I don't know how to install it. It's just there's a level of complexity there. The second one that I often hear is that DeFi is incredibly promising, but the governments around the world are going to shut it down. They're tolerant of it now because it's a relatively small space, but as soon as it becomes large enough to influence monetary policy, there's no way that it is going to be permitted. The response to that I sometimes hear, and I think Raoul Pal, our CEO and co-founder, has been very articulate about this, is to say, no, that's actually not what's going to happen. What's going to happen is there is going to be the union of the sort of regulated space and what's happening in DeFi. How do you think about that? How do you think about the regulatory, legal, and compliance components? What needs to happen in this space to make it sort of ready for prime time, embraced by regulators, by central banks, to a point where it can become part of the existing financial infrastructure and ecosystem?
It's a great question, and I think that's probably the biggest and heaviest question to think through when you're talking about crypto, and specifically in DeFi. And if you look historically on how governments and regulators have approached Bitcoin and Ethereum, it's been very cautious. Bitcoin and Ethereum have probably the best regulatory clarity of any two crypto assets on the planet, but they have a long way to go. And historically, regulators have a hard time of keeping up with innovation. We've seen that for over 100 years. Whether it's the NASCAR was invented because people had faster cars than law enforcement to bootleg alcohol across state lines. That's how NASCAR was actually formed. I think of like the 80s when criminals had cell phones before law enforcement, and so you have all these kind of lead lag of regulatory, but every regulator I know is thinking very deeply about this and how to think about the best way to approach this. There's not any ready-made answers, but I think that the way in which these decentralized finance platforms and protocols are built are interesting, and they're a new approach on participating in these networks and then having a voice in these networks. And so, the way it goes is, if you're depositing $1 million at BlackRock, you don't get any BlackRock equity or BlackRock reward tokens or BlackRock governance tokens of any or any kind of a voice. You just get the service. And
right.
So in these DeFi networks, when you participate, you get rewarded with incentive tokens, and those incentive tokens give you two ways to interact. You have an economic benefit because you participate in the fees that are generated by that platform, unlike BlackRock, where the fees always go to the shareholders or the owners. And then two, you have a voice. You have a governance vote in terms of the direction and the compass of that particular platform. I think that's very powerful, and I think that's really the primitive that is going to change a lot of industries and change a lot of human behavior going forward. And I look at this from the internet standpoint. If you think of the internet, like the early days, we were hand delivered the internet through AOL and Yahoo and other kind of silver platter ways of which you could email, get content, interact, collaborate, etc. But over the last 20 years, the internet, I feel like we're in the medieval times of the internet, still today, whereby most of the internet was born and financed off of ads, off of advertisement. So when I'm talking to my grandchildren, they're like, "Oh, the internet, how did that evolve?" And obviously there's a huge utility and benefit, but it was financed on ads. It's not that inspiring to me, to be honest, that all these ads that we don't look at is what financed the internet that we have today. Going forward, it's going to look a lot different. They're going to be participatory networks whereby, much like cooperatives, you have, blockchains are digital cooperatives. And the benefit you have is that you have tokens that act like a barometer as an incentive to participate and a benefit as a participant as the network starts to grow. And so these participatory networks, these incentive networks are just way too powerful. The current state of how we engage in certain things, whether it's Facebook or Amazon, et cetera, will be transformed with networks that the more you engage, the more you get. And so these digital cooperatives will continue to just demolish industries and platforms that we know today everything from the proverbial, you're the product when you're using Instagram or Facebook, et cetera. That will no longer be the case. Your attention, your data, your everything will be under your control, and you could sell it. You could sell your attention, and there's be a marketplace for that. Or if Mercedes wants to give you an ad and you have to watch it for 3 minutes, you get paid $500, not Google. And so these things from the medieval internet that we're in to this new internet with these participatory networks with incentive is really going to be exciting to watch. And I want that internet. I want that way of engaging on how I spend my time, my data, my attention, and how I behave and participate in these things. That's the internet I want to see. So yeah.
Yeah, it's so interesting. I looked up not long ago the percentage of revenue at Google, for example, from advertising, and it's greater than 70%. At Facebook, it's about 98% of their revenue comes from advertising. And it's pretty extraordinary when you think about Google. And, if you were to ask the person on the street, they would talk about all these sort of moonshot projects that Google's working on. But at the end of the day, these are advertising companies. That's a pretty extraordinary concept to get your head around.
Yeah, but it's given us a lot of utility, whether it's search or right. Collaborating with family and friends on Facebook, and so we benefited from it. But it's not an inspiring economic model underneath it. And I think that economic model where they're taking your and my attention and selling it to advertisers, it's a clever way of financing the internet. But going forward, I think the networks that we engage in and the ones that will keep us engaged will be because they incentivize us with economics or with a governance right, with a voice, and not just be like the product and then their shareholders get all the spoils. And so whether it's democratization or more equality, but it just sounds and feels way stronger than anything else that we see kind of in the current kind of business landscape of, are we that sticky to Facebook? Somebody's going to build a better Facebook, but it's really hard to get people off of Facebook or off of a certain platform unless we have the incentives to do so. And I think that's what the game changer is with tokenized networks. Whether it's Binance, having, you do more, you get more. And then with that token, it's not only just, I'm trading and I'm getting bonus points that kind of look like a currency. It's a whole ecosystem, and there's a lot more you could do with that. So I think, the initial kernels of what you do with an incentive token that kind of, maybe felt like an airline point the first time you got it. Now you have some utility with this, and then you have a voice and governance with this. And then these platforms try and do more for you and make that network and that experience more valuable. I think these are the kind of networks that we want to see.
Yeah. I was going to say, and that ends naturally to the third critique, which is an argument I know that you're familiar with. If you listen to some folks on the Bitcoiner side, when they hear about DeFi, when they hear about tokenized networks in general, their response is generally, we've got the one true money, it's Bitcoin, and everything else is really a use case that doesn't need to be built. Eventually, Bitcoin will do these things. There's no need for tokenized networks. There's certainly no need for DeFi in their view. I know that that's an argument you're familiar with because you were so early to the space, and many of the folks who make that argument. How do you respond to that?
I mean, I love the innovation. I love the, what's happening, and Bitcoin is a absolute winner in terms of store of value and what it's doing. Where it evolves to, I question that, because it's kind of as it's punched through $1 trillion, and as it continues to punch through, 2, 5, 10 trillion and keeps ascending, human nature kind of kicks in, and you don't want to mess with it. So it's going to get calcified in a particular way over some period of time. So I think all those innovations can happen on top of Bitcoin, and I hope so. And maybe in the worst case scenario for all the current projects and tokenized networks, this is training wheels for that to be on Bitcoin, because Bitcoin's not only the biggest and best store of value, but also has a security model that's pretty profound to secure other blockchains. But I still think the innovation and these networks, these railroads that create these cooperatives, create these economic incentives and participation with a voice in governance are just way too powerful to dismiss. And so the pace of innovation outside of Bitcoin is a Cambrian explosion, and it's kind of ebbs and flows in certain ways. So it's hard to take anything away from Bitcoin, because Bitcoin is literally Bitcoin, and it's what it's done is incredible. But you also can't dismiss all the innovation. And I mean, look at Ethereum. Ethereum has kind of been morphing for quite some time. And you look at the community, you look at the tooling, you look at the value on chain. Last count was like 80 to 85 billion in total value locked in DeFi, which is pretty profound. It's not going anywhere, and so I kind of look at it as, I'm not a Bitcoin maximalist, I'm not an Ethereum maximalist, I'm like an innovation maximalist, and I go to where kind of the energy is in trying to build out some of these systems, which are all very hard to build out from an engineering, a go-to-market, a regulatory dynamic. But once certain teams and projects align all that, it's extremely powerful.
Yeah. One of the things that you've been very eloquent about in the past is interoperability. You've talked about this forest of interoperability of a series of different tokens and how they can interact potentially together. Tell us a little bit about what your thinking on interoperability is and how that comes to be implemented with some of the infrastructure you're working on at Bloq.
I mean, you think about interoperability between like one token and another token, whether it's Ethereum and Bitcoin, and how those interact. And you're seeing certain primitives where, like, well, let's wrap Bitcoin on in a centralized location and be able to trade that in the Ethereum DeFi network with a wrapped Bitcoin. And I view that as like that is a baby step training wheel version of that, because that's centralized and it's not necessarily that scalable in that way. And there's two massive interoperability opportunities. One is in DeFi and how you align all this, all these pieces of DeFi to have a unified experience. And that's what we're trying to do at Vesper. You have certain things for borrowing and lending and derivatives and all these complexities within DeFi that are all individual primitives, and you want somebody to bring it all together. So I like to say that Vesper is the Google for DeFi, and it kind of brings it all together, which is really important. And then if you look at Web3, that's the other. So DeFi and Web3. Web3 is the new internet, like literally full TNT of the existing system. And it is a new railroad that we're going to be interacting on going forward.
Unpack what that means for people who are not necessarily as versed on the technical side as you are, what the implications are and what the opportunities are for Web3.
So Web3 is just, I would say, is the internet, the next internet. And the current internet, for the most part, we get served through Amazon for the most part. We have Amazon, Google Cloud, IBM, Azure, and Microsoft, and Amazon is bigger than all of them by a factor of I think 3x now. And so our internet actually passes through Amazon. It's relatively centralized, to put it mildly. And so there's censorability associated with that. There's privacy associated with that. There's all these things that we kind of take for granted until things change or we have some kind of awakening in terms of, how is our data managed? Can we be shut down? All these things that we see certain things in the periphery, whether, somebody in some country shuts down Twitter, it's like, that's weird. How's that even possible? Or shuts down a particular voice. And it's like, that's strange. And so a lot of these systems really underpin privacy, security, and certain freedoms. And that's a life, liberty, pursuit of happiness level thing. And so right now, we basically serve our websites and kind of interact for the most part through Amazon. Going forward, all those layers of Amazon provides compute, storage, database, access, et cetera. Like the layer cake of Amazon is kind of all those things. And they bring it together to make it easy for companies to just get onboarded and start serving stuff on the internet. And it's a really efficient, powerful model that's scaled to the moon. And they've done an incredible job of that. But going forward, in order to ensure those privacy, those security, those being uncensorable, there's a new internet that's being built today. And if you think about the anatomy of Amazon, juxtaposed in terms of what's happening in crypto, for storage, you have Filecoin. For compute, you have Golem. For data, you have the graph. And so you're having a whole new stack be built, literally right now, that is going to compete with that. How that interoperates, that stack of disparate services, there will be somebody that composes that. There'll be like a Vesper for the composing that Web3 stack. But each layer of that is happening right now, and they're, each of those are $10 to $20 billion layers right now, kind of in the earliest days of within the first year of their launch. Right. So when you think about, each of those being 10 or 20 billion as the starting point, and kind of as they scale and find their groove and find better adoption and find wrappers for them to be used a lot easier, I think that will continue to have a very well-grooved path for individuals that want to be on that internet, for institutions and companies that want to be on that kind of internet, where you have better security, uncensorability, and all those things. But we're still in the early days. Like we are, mid-90s internet for this Web3. We have a lot more building to do. But it's happening probably faster than I would have anticipated at this point. All those primitives of compute, storage, database, et cetera, are more impressive than I would have imagined, and they just continue to iterate because now they have the resources too. So all these primitives that have 10 or $20 billion market values also have $1 billion or $2 billion or $3 billion or $5 billion in terms of treasury in order to go to market, in order to get adoption, in order to hire and the rest of it. So while they might on one hand look inflated in terms of price, they also have resources to build and invest and make a dent in the current legacy system. And it's kind of funny to call Amazon Web Services a legacy system, but that's how those builders, that's how those networks think of it.
Yeah, this is such a profound point. This idea that effectively what these digital assets can do is move effectively in the same way that we saw Bitcoin become a kind of digital gold to become a basic infrastructure for the backbone of the technology that we use every day, the stack that you're talking about, compute, data, and storage. These are the fundamental primitives of what makes the internet the internet. It's a really big idea to get your head around.
And it's the really the gravity, the weight of this. If you think about like all the compute, the storage, all those things that Amazon has, and then if you think of what is out there on the planet in terms of on people's laptops and people's servers, in data centers, et cetera, universities, all the unused compute, storage, et cetera. These systems basically create a collective to allow those systems to be used. So if I have unused storage or unused compute in my data center, and I'm a university, I'm a government, I'm a company, I could expose those to these systems. And there's secure encryption and all these ways in which it's not going to crawl through with the rest of my network. But I now get to monetize my infrastructure. And the amount of infrastructure that has idle compute, storage, et cetera, is a massive multiplier versus anything Amazon has now. So again, going back to that, that cooperative mentality, as you contribute to these systems, and right now people are, thinking about like, oh, is this gonna intrude on my system? Is this gonna get hacked, et cetera? All these form factors are going to be a lot less of a thing when these systems continue to mature, to say like, I have unused capacity. It is the only choice I have is to contribute this so I can monetize it. And then that creates these new railroads that people will be using as the new internet. And so it's a capacity thing, it's a cooperative thing, and it's an incentive thing that is way too powerful to dismiss.
Yeah. All right, Matthew, I have to ask you this question. So when I often explain the case for Web 3.0, Web3 to my finance friends, these are the skeptical responses I get. And I imagine you can make a better counter case than I can. So let me tell you what I'm hearing. So what people will say to me is, Ash, that's all really interesting. But look, number one, there's no demand for this. There's no demand for this right now. This is something that is very much, decades into the future, if it's ever going to occur at all. I don't need these services to be centralized. I'm very happy picking up the phone. I've got someone I can call at AWS who will take my call at 3 o'clock in the morning if there's an outage, if there's an emergency problem. This is just about selling tokens. There's a supply with no demand. What do you say to that argument?
I mean, it's early days on the supply and demand curve for certain, and you need a token in many ways to create this chicken and egg dynamic on the network. How do you get a network going? And it's like, well, I could raise $100 million of venture money and start paying everybody to whether it's advertising or incentives or anything else. But it's not as powerful as giving them a token where they get a token on the early days of a network, and they're rewarded as that network grows, the value of the token, and then they get more as it continues to scale. And so it is. My investment thesis: if something doesn't have a token on it, I am super not interested. It's that powerful of an element for me. It's like a green light, red light on pitch decks or entrepreneurs that I see. Some of them are challenging because they're like, well, they're just putting a Priceline.com or an Expedia with a token on it, and it's like they're just dropping a token on an existing model. So some of those will continue to work, some of those won't, but in the Web3 scenario, those incentives are really, really important.
Right. One of the other things I wanted to ask you about, I know I'm mindful of your time, we've run way over, but this conversation is just, there's so much that I think people are going to get out of this when they hear it. I'm curious if you could talk a little bit about the way that you've structured Bloq, because I think it probably reflects some of your own thinking. Here I'm talking about Bloq Labs versus Bloq Enterprise, Bloq Connect versus Bloq Nodes. Tell us a little bit about that structure and what it reflects about the way you see the world.
I guess it's two flywheels. One is we have software infrastructure that is, kind of boring, in a way. It's very utilitarian. Like people are going to need data, people are going to need nodes, staking services, and that building that infrastructure and scaling that and enhancing that gave us this exercise to build some of these networks that we do. And so we've built Metronome, and we have another company called Titan, which is building a hash rate oracle. and then most certainly in Vesper, all that exercise gave us a level of expertise and depth and understanding on how to build some of these smart contracts and some of these layers way better than if we just did one or the other. So I think there's an interesting interplay in terms of how we tend to some enterprise clients with this infrastructure software to how we build new tokenized networks in the wild. And I think it's an advantage, quite frankly, in being able to do that and have a team that's able to exercise kind of both parts of the brain.
Yeah. We've covered an extraordinary amount of ground here. To bring it back together, Matthew, if you had to leave our viewers with a few key points, how would you think about this? How would you advise them in terms of what tools they need to have to understand the world as it is today and the world as it's going to be tomorrow?
The crypto ecosystem is vast in terms of its scale, everything from money to the new internet. And so being in the space for like close to a decade now, the learning curve is still steep. But the entry points, whether you're an institutional investor, you kind of start with, a toehold in Bitcoin, maybe get to Ethereum. And then you start thinking like, okay, I built this perch. Where do I go from here? Everybody's thinking about DeFi. Everybody's thinking about, how to further lean into crypto. As an individual, you have a lot of noise and you have a lot of complexity in terms of trying to figure out where to participate because you have hype, you have, prices going to the moon, and sometimes it's hard to distinguish where to apply your attention and I'm not giving any investment advice, but how to participate in some of these projects and protocols.
Right.
And there is, gravitational pull to some of the market leaders, obviously Bitcoin and Ethereum, and then you have some other DeFi Web3 primitives that look very interesting, whether it's Filecoin on the storage side. There's a lot of blue chips that are starting to form that kind of take away some of the hype of, I've been asked about Dogecoin a lot over the last few weeks, and it's hard to say anything besides that's what happens when you get like-minded people in a cooperative thinking the same way. It is extremely powerful, and a lot of that is having some fun. A lot of that is trying to make some money and participating in something super new.
What do you say to those who say there's just no use case right now for Doge? There may be one in the future. You have this community involvement. We may get there. But as of today, there's simply no use case. There's nothing that Doge does better than some of the other coins out there, Bitcoin and Ethereum, for example.
Yeah, I mean, it's very speculative. And there are some projects that are building more utility for Doge because it's now at a size and shape that's of a certain consequence. And so people are now saying, I mean, you could have said the same thing about Litecoin. Like, what is the purpose of Litecoin when you have Bitcoin? And so there may be use cases or transformations for certain things, or even a test bed for, if you test it on Litecoin, maybe it gets adopted onto Bitcoin one day from a feature standpoint. But you just never know what could happen with a Doge. I go back to like-minded people believing in something and creating an incredible amount of power around that. And you see that in the value of Doge. Will there be, DeFi projects and products around Doge because it's now at a market value that's of consequence where people want to start compounding that and doing different things with it? Once it gets to a certain level, smart entrepreneurs will continue to iterate and find different use cases for that. So I'm not saying Doge yes, Doge no. I just am incredibly astonished at the magnitude of that community doing what they've done. And it helps to have, somebody like Elon Musk, naming their rocket Doge One, and kind of being a fun spokesman and just, again, pointing to the the silliness and the power of something like Doge.
Yeah, I've said before, probably significantly less eloquently, radical uncertainty demands, radical humility in the face of the unknown here. And I think one of the things that's hard for people, especially people who have a background in the traditional investing world, to understand is that market capitalization can come before the use case. That's like a weird proposition for someone who, for example, spent time in venture capital to get their head around.
Yeah, and like, right now we're talking about, tens of billions, $20 billion protocols out there. That would be like a crazy successful IPO, 10 years ago. That was like top of the mountain. Now it's like, well, that's a great start for something that's going to displace Amazon, So like the orders of magnitude, and seeing now, several companies punch through $1 trillion in market value, seeing Bitcoin punch through $1 trillion market value. I think the financial literacy and the orders of magnitude of some of these markets and opportunities is also coming into light as Bitcoin, is at $1 trillion. When will it eclipse gold at 9, 10 trillion? And so it's just fascinating to watch this unfold and have a front row seat to it.
Yeah, extremely well said. Matthew, thank you so much for joining us.
Thanks for having me, Ash.
Thanks for watching, everyone.